What is up, guys? All right. Got lots to talk about. And Bitcoin's being really sluggish right now against this supply zone. Fully mitigated it. We're basically going range bound, trying to determine which direction we're going to go from here. The longer we kind of go range bound here, the better the reset, right? We got some people on Twitter. What's up, guys? People coming in on YouTube. Oscar, how you doing, man? Good evening. What's up, man? Dylan, how you doing, bud? Right on. Yeah, so we'll give it a couple seconds here, let people jump in. I need to create an intro to allow people to have some time to get in. Ever since switching over to StreamYard, everything's kind of different for me. I gotta record a video to set that up. Solomon, how you doing? Coma, how you doing? David, what's up, man? Noah, how's it going? All right. I think we're good. We're gonna get started. Yeah, so Bitcoin has finally ended this regression trend that we've been in. This trend here, it wasn't too long of a trend, but it's just over a little bit of a day before we actually finally lost momentum. And not gonna lie, I thought we called the top here, not like the top, but like a top. When we had this moment here where we jumped into a short, trying to basically scoop up the liquidity, like that's from below this regression trend. We built a lot of liquidity through here. And we got a massive majority of it of 104K. But we got a lot of warning signs telling us to get out. So we listened. I closed half of it when we lost this downtrending momentum here. Right? We had like this on the lower time frames. We were watching this on like the 2-minute. We can go down to the 2-minute here because the warnings are a lot more clear when you look at the lower time frames. They paint the picture completely for you. So here, we lost our downtrending momentum and we created an inverse head and shoulders while breaking that momentum. So, and in combination of that, we saw like it fractalized. We saw another fractalization of a inverse head and shoulders off of the local demand where we had this impulse move, built this base, another impulse move. So we established this as demand while we were up here, right? So we knew this could be a threat. And we started finding support off this momentum once again. We knew there was a buy wall here. It held up, but that buy wall was mostly mitigated when we came back down, right? So we weren't too worried about it. And then we ended up breaking momentum. And at that point, our entry was at a threat. And in combination of what the structure looked like at the time, we saw that, okay, the measurable target of this is roughly around its neckline. So if it has enough momentum to break the neckline, it would stop us out. So I closed half my position here. And we got to the neckline, came back down, and then eventually you would have been stopped out if you didn't close your full position. So in this trade, I did lose money, basically about 0.5%. Well, it was close to break even on this trade. And then we had this trade here where basically it was a kind of a combination of the fact that we just had a 15-minute change of character. So over here, we had a 15-minute change of character occurrence off this low, right? And here's a fun tidbit. If you break if you get a change of character on the 15-minute time frame, what you could do if you don't have an entry for a short and you think like, okay, we got a bearish change of character, but I don't like my risk to reward ratio. No one would if they're thinking about entering off a 15-minute level. What you could do is like, once you find that support established, then you can pull a fib from this high to this low to find an area of interest like this, like the 618 and the 786 level in your Fibonacci retracement pull. to find out an area of confluence where resistance will be met, right? So here became a second trade for me. There was a double top scenario, also a low time frame change of character occurrence. And in this time, what we do when you pull from your high to your low based on your 15-minute change of character response and you're looking for that pullback, you dissect things on the 3-minute and you look for your structure to define your entry. And here, what I normally look for when we're inside these zones is an opposing change of character, right? And we had the loss of uptrending momentum. We've got the double top, right? We define this as our strong low when we had this break of structure here. And then we got, this was our strong low here. And then we came down, got the change of character currents, and we started targeting the continuation down from here because we had that change of character. But no, Bitcoin decided not to. We lost momentum. We got a double bottom, and we started coming back up. So we had a couple of warning signs telling us to get out. We lost that internal momentum. We got the double bottom structure off the VWAP, and we're given a second chance here with the double bottom here. Once that broke, yeah, at that point you would have been stopped out. So yeah, I got a loss here. I didn't listen to the warning signs to get out. It was kind of late. I was chilling with the family. Here I listened to the warning signs, got out. But yeah, it's been kind of being a butthead when we're trying to call this top. And it might not be the top here, right? So now that we're going range bound for a bit, we could actually, this could help create a reset in the market. All those people that contributed to liquidity can now exit the market. So the reasoning for going down could decrease over time. So just be mindful of that we could actually have the continuation to our next little key area of interest, which is this downtrending point of interest here from the all-time high in confluence to this previous value area low right here, and this recent high here where liquidity is resting around 109K. So this is a point of interest that we could still come up to before coming down. We don't have to go down, of course, but that's a good spot to prepare for a potential top, just like this is too, right? We have supply concern here. This could be a potential top. The longer we go range bound here, though, the more likely we are going to go up and grab this point of interest up here. We'll see what happens. The picture that looks like it's trying to paint right now is a little bearish, right? It looks like we are getting like an inverse head and shoulders behavior. We got like 3 taps of resistance. So we could come up, maybe hit our head off the value area high again. We prepare for shorts and go from there. I don't know if like the market's trying to tell me not to short, but just, yeah, around here, I'm still going to listen to my rules, right? If we get the opposing change of character in this zone, I will jump into a short and I'll target the value area low and hopefully we'll go further down. But if we instead get that break of structure and continuation, then I'll prepare for a potential long if we don't start to come down to give us the change of character. And at that point, we'll be targeting around here. So if the R&R is okay, I might take it to this point of interest for a potential long. But shorting is definitely going to feel a lot safer at these areas. Well, yeah, that is Bitcoin. So I'm like, I would love to enter longs at this value area low, but the structure has been a little awkward. I don't know about you guys, but like trading this chop is really awkward. Like there was this moment here where we had this descending channel and you could have taken the break. However, we had the wicks here and that might keep people from wanting to want that to have broken before jumping to change of character. And by the time that happens, you're already almost halfway to your target. But now we're building like this internal regression trend here to the upside. And we could get that, we could get that change of character and start targeting down here again. We'll see what kind of picture it paints us. But the long setups haven't really been great unless you were over here jumping in on longs. These were kind of okay scenarios where you could have gone in the lower time frame, inverse head and shoulders here or here for a potential long. But in this double bottom was kind of awkward because it was like wasn't all the way down to the value area low. But yeah, so just a matter of waiting until we get the price action to work its way up for a potential change of character and loss of momentum to target the value area low and hope for a continuation if we see the value area low act as resistance. And then we'll be, they'll be set. I won't be entering anything inside of the value area, of course. You want to be looking for setups above or below the value area. We going down hard, says Coma. Yeah. It's Batman with stretched out wings, man. Yeah, it looks like a harmonic pattern. I'm trying to remember the name of the harmonic pattern. It does definitely look like harmonic pattern. And it does kind of look like it's a bat trying to flap its wings. Yeah. It's kind of funny. But yeah, that is Bitcoin, guys. So just preparing for the potential short. All this price action is terrible. Yeah, a lot of people are getting beaten up from this. It's either making small gains or having losses, basically. So if you don't like the market conditions, sometimes it's best to just use this time to study and not take action because it'll save you more money studying, right? If the price action is not really agreeing with you. Okay. Yeah, you too, eh? Think so? Okay. Thank you. Awesome. You shared the last 3 losses. Yeah. I'll go through it. I know I made a post about it in the Discord, but man, it sucks when all the stars kind of align with your rules and you still, kind of lose your setup. But that's just part of the game. And sometimes the market will shift and then your rules will just not work out very well during that shift. I'm aware of one. Like, unfortunately, I don't think I could learn anything from this. But I did learn from the fact that, like, when we're trading between the 50-day and the 200, especially during this kind of mess, my rules are crap. They don't work out very well in these kind of scenarios. And I learned from that. So now I know if we ever have like one of these like pinch scenarios between the 50 and the 200, that I should just step away from the charts and not trade, right? But from this regression trend here that we had, like I'm not sure if I'll be able to learn from this. There's no like everything, like all my rules were kind of met. So, and then from this initial loss, like that's kind of a normal loss, right? Like I remember us jumping in on the 5-minute structure. We lost uptrending momentum. We had the double top. We had the change of character. And then it started double bottoming against us at the VWAP and the POC. I was reminded that the VWAP is king, of course, and to have the VWAP on your back most of the time. But not really much I could have learned from with these losses. And your goal when you have a losing trade is to focus on like what could you learn from this. Yeah, I guess in each of these scenarios has the VWAP involved too, where we start to slow down around the VWAP, and to have the VWAP on your back when you're doing your shorts, maybe that could have saved us from these losses, or knowing when to get out if the plan starts going against us when we have a recent bounce off the VWAP. Yeah. Well, that is Bitcoin. Hi again from the Netherlands. What's up, man? Took some nice profits today. Okay, you might be the only person on the planet. Like, yeah, you're doing good, man. Yeah, not more too. Yeah, I need to sleep more. There's always paper trading as well. Yeah. And paper trading is good for learning too. I always recommend paper trading for someone who's just starting in trading. The downside with paper trading is it doesn't teach you how to manage your emotions, but it will at least teach you how to like, get the muscle memory of following your rules. And then the emotion comes from trading with funds. And you should start with a low amount of funds, like $100, right? Risk to lose $1 to try to gain 2. And then work your way up to a balance until you feel comfortable with it. But I remember when I guess it's a kind of a good problem to have. My account grew really fast and I still wanted to risk to lose like 1%. And going from risking to lose like $300 per trade to $1,000 per trade, that was a huge emotional struggle for me. It took me like 3 months to get over that. So I worked my way up with like 20 to like $50 increments, like risking to lose like $50 more in each kind of like little setup until I got emotionally comfortable with it. Okay. Well, so we went over Bitcoin already. So I got another 40 minutes to chill with you guys. So if there's anything that you guys want me to look over, we can look over different assets, um, any cryptocurrencies, anything you guys are studying, or anything that you guys want to, any indicator that you're struggling with, stuff like that. I can answer any trading questions you guys might have. We can go over Ethereum while we're waiting here. So Ethereum, kind of curious to see how it's been doing. I haven't looked at it today. Oh, Ethereum's got some relative weakness. Had some relative strength here for a moment. So it looks like, yeah, Ethereum broke out of this flag posture. We were talking about this yesterday, where this is like actively bearish, but normally breaks bullish, right? So because what happens in the background is we add liquidity, but we keep taking it from the downside. So our reasoning for going up is much, much higher if you think about things in a market maker's perspective. So here would be under attack the moment we break out of this area. What a rude fake out here. I would definitely consider this a fake out. I'm not one to say fake out. Like I kind of understand like why we have our certain pullbacks, but like if you see something like this where we have that what's called a confirmation formation. If you ever see a structure that mocks the same appearance of the macro structure, right? That fractalization is a warning sign that we're going to have a good play out, right? And it like started off with a good break of structure continuation here, and then we pulled back, knocked people out, and then went that direction. So that's really freaking rude, seeing something like that. It could have been something relative to Bitcoin's movement that could have caused that pullback, that sign like that weakness, and then we started coming up. But yeah, that seems like some rude market maker activity there. Then we double topped up the previous value area low, and now we're coming down with a rounded bottom off of this point of control here. So it looks like we're going range bound a little longer. So what this basically did is create a range extension. But what we're trying to do is get acceptance into this value area. When we fail to get that acceptance, what you want to see happen, oh man, that would have worked. That would have been so well. But yeah, what we want to see happen is the pullback and then a higher high, and that gives you like proper acceptance into a value area. And yeah, instead we got the neckline break off of the value area low and a low time frame confirmation right here, telling us that we're going to come down, and that would have given you a rough target of at least momentum based target. Would have told you that we're going to be coming down to this previous demand zone right here, and that's basically where we went. Yeah, previous value area low. I mean, previous point of control. So now we can pull a fixed range from here. See, yep, from here to here. We can use this value area data to help us with our setups. So now if we have price action come up here, we can prepare for this value area high contributing as confluence for our shorts. So if you need value area data to confirm your trades, then this is the local value high based on this value area here. And same here for longs. You preferably want to have a bit of a deviation below it, like similar to this, when you're getting your setups, just so you have that better R&R. But you don't want to deviate too far especially after a retest like this, where we have that break of structure continuation. If it starts to deviate below like 50% of its level, then prepare for it to potentially continue to go down to the next value area. Oh yeah. So it looks like Ethereum was being a big butthead. with this like price action. Yeah. But pretty clear direction though, like with this structure going to the upside. It's just a matter of not getting stopped out here and then having the confidence to get back in after it broke out again. And here was a pretty transparent setup, like seeing this structure pretty common where we have a impulse move, a base, and another impulse move, giving us a little demand zone for our neckline retest. It's insanely common. And then when we came down to mitigate this demand zone, we also had the confirmation for a continuation down. That's kind of textbook, but all that. What should we? What's this question here? What should be a confirmation candle formation or look like? What should a confirmation candle formation or candle look like? Yeah. So it's a lot to do with market structure. So what you want to see have happen, like a confirmation formation is not a simple answer, but a confirmation in general, it's usually a pretty simple answer. There are different types of confirmations, and it all depends on what kind of trader you want to be. For me, a confirmation is a change of character. However, when it comes to using structure like this, a safe confirmation would be a break of structure after the retest. So when we come down, at least getting a 2 candle pullback and then the higher high, that's a form of confirmation. So when people see this, they'd be pretty excited to jump on this long. The only thing that might have kept you out is the positioning of the value area. At this time, you might not have pulled a value area. Let's see what it looked like at the time. So that's yeah. So the positioning of the value area is what might have kept you out. Because at the time, when the confirmation occurred, we were like right at the POC and we hit the value area high and then started coming down. But down here, you might have want to try to revisit the trade. We had that pullback, 2 candle pullback here. And then we got the higher high right here. So that would have been your confirmation right here to jump in, stop loss guard there. Would have scared you a little bit and then ran up. And you would have much better R&R if you were just targeting the value area high in that kind of scenario. Let's see. There we go. But yeah, typically a break of structure is a confirmation for a lot of traders. And same with a change of character or an SFP. SFP is a whole different type of structure. Yeah, but it all usually involves market structure. I'm not going to look at Farcoin, man. I'm sorry. On the Fibonacci retracement tool, when do you use the reverse button? I haven't used the reverse button. Let's find out. So if we were to pull a fib from this high to this low, it's an unconfirmed low. So this is not when you'd actually pull it. Let's pull up the settings. Scroll down. I don't see no reverse button. Oh, there it is. When you would pull it. Okay, so it's just basically inverting your percentages on your settings. So if you're trading alongside the trend, so let's say, for example, you're trading on a downtrend, your goal is to pull from the highs to the lows to find your exhaustion period when you're in a macro downtrend, right? And you're just trading internally to that downtrend, you'd want to find where we get exhausted when preparing for a short using Fibonacci. So like the inverse button, I would say like it's not a very effective way of using it. In my opinion, there might be a different way use of it. But if you're going in a different trend where things are uptrending, you'd want to use the Fibonacci to define an area for an entry on the downside, right? So you'd pull from the lows to the highs to find your area of confluence for potential long. So if you're clicking the reverse button, I think it's mainly just a fast-paced way of speeding up this process. But in my opinion, I would just pull a new one. I wouldn't go as far as going to the settings and scrolling down and doing that. It'll just be faster, in my opinion, to favorite it right here. So as a part of your menu, your quick menu, so you can access it a lot faster here, like this way. I hope that helps your question. I'm not sure if that's the actual purpose of the reverse button, but I could see that's probably being the reasoning, just to try to speed things up for people. Let's go see if I'm missing anyone with their questions here. Got a request to look at Solana. I'll work my way down the chat. So Solana for Solomon, and see what we have, man. Solana is the SFP king. So anyone who likes to trade SFPs, I highly recommend Solana. Gives you lots of those opportunities. And as we talk about an SFP, it looks like one might have just happened. Let's see. So let's go back in time here. Okay, the last time we were looking at Solana, we were looking at the confluence of us being at this downtrending momentum right here. And this key level here that, if broken, could help induce a move back to the demand zone. And we went range bound just like Bitcoin did. We have a fixed range volume profile pull from here to here, where we start seeing it act as resistance. And now we're coming down to that demand zone. Let's pull this. So we're at an area of interest where you would want to normally prepare for longs. And we don't want to update our fixed range volume profile pull until we have acceptance back inside it again. And then we can start updating our pull. Because we don't want to change the volume data that defines this as resistance. So if we keep pulling it down, our key level is going to keep rotating. And it's not technically a part of the value area anymore right now. If I pull, let's see, we got a value area low. It's at $143.30. So this is a good spot where you'd want to prepare for long. So if we have the change of character occurrence, where is that? Right here? Yeah, it's right here. This is our neckline for the 15-minute. You could try front running this on the 3-minute. So if I were to go to the 3-minute here, let's see what we have for structure. So our 3-minute change of character is right here. It would have been lower. It would have been right here. If we got that lower low, it would have been defined as this location here. But this is all internal to right now. So we need to break this level. And then we would start targeting the 15-minute high. And if we break the 15-minute, then we have the 15-minute change of character, giving us a double bottom and acceptance into this value area, where we can start targeting the value area high again. There's some confluence here at this value area high with the previous value area low. We have this little supply concern where we double topped here. But of course, always watch your point of control along the way as well. If anything, that point of control isn't too strong. So what would likely occur is we hit our head off it, pull back for that continuation, hopefully to the upside. But if you see that opposing change of character here, listen to the market and get out, because it will probably start to come down from there. It's very, very common for us to retest a POC after we deviate out of the value area and then continue to go down, or vice versa, right? Hit the POC, then continue to go up. It's typically also in line with like equilibrium rules with range bound exits. So if you have done studying on that, basically like the equilibrium point is typically the center point of a range. And that's where we tend to retest before leaving a range if we've deviated out of it for too long. So hopefully we don't deviate too far out, or else we can end up seeing that POC being the result of a move back down this way. But yeah, we're definitely in a bullish spot for Solana. I hope this helps you out. But yeah, basically 3-minute front run opportunity. If you know how to trade that, then and it meets all of your rules, then go for it. Then you'll have to watch this. You'll babysit it up to that point, but once it breaks that, you can start targeting the value area high, which is currently around 145.75. Okay, so that's Solana. I'll save that. There we go. Bitcoin's still creeping up. We're going above the VWAP now. We're coming up towards, there's a small area of confluence for shorts, but most of the confluence is up here. above the value high. A dot for a spot buy from Noah. Let's see what dot looks like. Has it gotten better or has it gotten worse? It has gotten worse. Let's see. Yeah, just for reference, some people that might have not seen yesterday's live, we were talking about this macro valley area that dot has been in for over 1,000 days, 1,100 days now. And it's basically in price discovery. If you think about its first liquidity, it's usually a day that's not counted as price action. And we're below a macro key level from its creation. And now let's zoom in on the lower time frames to see how it's doing. So yesterday we were looking at this uptrending momentum, a part of our analysis here, and the valley area here. We got a bit of a squeeze against the momentum here, and we came up, hit our head off the valley area high, and then came down from here. We're looking at the 15-minute time frame right now, and let's see, we're updating our valley area up until up to here. We deviated pretty far away from this valley area, and we fully mitigated this demand zone here. So this can't be trusted again. But we have we're building a double bottom structure right now as we speak. The downside is we have a supply concern right in our face. We did tap into it already, which is likely the reason why this neckline even exists. But when we tapped that, we mitigated some of it. So we'll see if this gives us the measurable base target of pretty much probably where the downtrending momentum is. We're just going to be, so it's suggesting a move to basically here. So I'd watch the order books for a dot if you have a good order book to look at and see if there's potential resistance here. But yeah, this might be a short-term move, but hopefully we get the break of the downtrending momentum alongside this break of this double bottom. We have no change of character on the 15-minute until way up here. That's kind of rude. So yeah, you'll definitely have to depend on like lower time frame structure to define a potential entry to front run that 15-minute change of character. That's way up here. Yeah, the 5 minutes not even that great either. But we did get it here. If you trust that. If you don't trust it, yeah, this is the bank level you're gonna have to watch the supply concern here. So if you see any posing changes of character internally here, like inside this supply concern, we're not likely going to go and test this level. So what we're in a kind of a situation though that we should be pumping. All right. Well, that's dot. I hope that helps, man. We were basically deviated away from the valley area, building a double bottom posture. It's suggesting that we're going to try to retest the valley area low. We do have this downtrending momentum that can hit our head off of. But if we break that, our next key level is here for that 15-minute change of character, and then we can start targeting the valley area high. So I'll be in bull mode right now for dot. I wouldn't be focusing on shorts. Fib trades though are looking great for shorts. If you use like Fibonacci, we're just talking about that actually when if we're in a downtrend, we'd be pulling from the high to the low, right? And you would hit your head off. You watch these zones of interest for resistance. And so it looks like dot's good for those kind of setups. So if you're interested in doing fib trading, whenever you see a descending or bearish regression trend like this, it's really good to pull out the fibs. Same thing for Bitcoin when you have the opposite version. Like if you look over here, this is a really good example of how you could use like fibs to help define potential entries from your low to your highs. Trying to find that impulse move is the harder part. Teo, Request from Kelevant. Let's see. Do we have a Teo chart? I feel like we do. Tau. If I'm saying it wrong, you can slap me in the face later. But yeah, I think it's Tau or Teo. I'm not sure. It's looking weak, man. So here we got we marked local resistance. I'm trying to remember what we were talked about yesterday. We have well, I'll tell you what I can see now, though. We have this descending channel. Pretty vertical, honestly. We are coming to this previous inverse head and shoulders. And we're using the value area high as support. Right? So we got that area of interest that we came down to retest. And now we are coming back up to hit our head off of the downtrending momentum. We'll see if we break through it. We're getting above the VWAP, so that's good confluence. What we'd want to see if you're late to the party is that pullback. We're just talking about this. If we get the breakout, pull back for at least 2 candles and then the higher high, that's a confirmation of the break of this regression trend. And then you just watch your supply concerns along the way up for your barriers to help define a target. The technical target for a regression trend is the top side of it. So if we end up hitting the technical target, then awesome, but you still have to watch out for the supply concerns along the way up. We did have this, it looks like the last time we were talking, we might have been based on this like double bottom structure that we had here, but it looks like we broke past the VWAP and we were marking this area as a potential barrier of concern for like the local resistance, and it played out that way, unfortunately, so it didn't get that run up. But that same level is going to be an area of concern for potential shorts. It looks like yeah. So you'd mark here to here as potential barrier along the way up, and you want to find all your barriers along the way too. And one thing that really is really helpful for that is looking at the like heat maps and finding out where's most of the weighted liquidity resting. And it's typically usually right above wicks. And you can look at areas of confluence as well alongside that, like this previous value area high, or this last time we were retested this as a form of support. So here could be a concerning area too at 335. But yeah, but if you're late to the party, it's just a matter of waiting for that break of structure retest and see if we get the same kind of regression trend behavior, but in the opposite direction. If we zoom out a little bit on this to see how often this happens, is it a good trend trader's asset? Yeah, it does look like not one that's typically great at range bound trading. It does look like a trend trader's asset. So if you like to trend trade, I would keep your eyes out on this asset. I didn't realize how much I've done, how many times I've done analysis on this. This is not one I've ever traded myself. I don't think. That's Teo. I'll save the Teo chart for you guys. There you go. Some alts were really dropping last night. Yeah. Yeah, the other's dominance is below 7% now. Caliber saying he did a local short on Ethereum since it's at a local value high. Nice. Aerodrome from Big Moon. How long has it been since I looked at that? I don't know if I have an Aerodrome chart. AER. I guess let's see. Aerodrome Finance. I'm guessing that Coinbase might be a good one to look at, but it is usually late to list stuff, so it might not have all the data that we want. We'll pull it up on here and see how it looks. At least we have a 200 EMA. Not very old, but yeah. Okay, so Aerodrome has been macro range bound for a while. pretty much since its creation, which is kind of nice. It had this break of downtrending momentum. It's very consistently dropping. How long was that drop? 123 days. Oh, this one. This could be a good trend trader's asset too. 98 days. And we've been in this uptrending momentum for 90 days too. Okay, so pull a fixed range. You can pull one for the entire history of this asset, which is kind of cool. We might be getting its very first, second golden cross. We had one here. We had death cross here, and now we're could be coming up for a golden cross. Not something I would depend on as a strategy for this asset just yet because it's too young. But if you guys are interested in using the golden cross strategy or the death cross strategy, then Bitcoin's a great one for that. Go through all of Bitcoin's price action history, and you'll find the win rate is absolutely phenomenal when you're trading daily golden crosses or daily death crosses. And I back tested it pretty thoroughly, and the win rate's not like incredible, but the profitability is insane. It's just stupid. It's absolutely insane. When you see a golden cross, you look for your daily strong low. So in this case, it would be here. It could be a new level like here soon, but you look for your daily strong low and you enter on the cross. Don't do it with this asset though. Recommend it with Bitcoin though, for sure. Now it looks like we're building a head and shoulders off of the 200-day EMA. You can see it here kind of painting the picture of potential distribution. We're failing to create that higher high, warning us of a lack of a continuation and that we're stacking and pooling liquidity below us. See, it's more like kind of an ascending support level, but you want when you're drawing your uptrending or downtrending levels of resistance or support, it's not the level itself that you want to like keep an eye out on. Maybe it's good for setting alerts, but it's the level that will define its break or give you a change of character. Since we're kind of ascending like this, our change of character technically for the macro probably won't be until roughly around here. But you can still watch these levels of interest, especially at the confluence of the 200-day. It's kind of awkward trying to short into this side. You want to try to get shorts up here. Like with your right shoulder, with the head and shoulders, it's typically the golden pocket level. Like here to here, you have your golden pocket key level. Almost every single time, it's where the right shoulder will be formed. But yeah, so use this in confluence for helping you front run the break of a head and shoulders. Like Fibonacci is amazing for that. So if you ever see that we're at like an area of concern, or if you break this downtrending momentum and you're trying to find an area of interest where we might hit our heads, then you should always start your pull from the high to the low after we get the opposing change of character to define this as a low. You don't want to like keep pulling your fibs and then being wrong on where you pulled it. How you be right on your pull is to just wait for that opposing change of character to define your low. So once you have that defined low, then you can pull your pip from here to here and then find out your key level of interest for potential shorts. And that would have been the front run to the potential break that might occur based on the picture that's being painted right now. We might be building a head and shoulders. And the measurable base target for this is pretty steep. It's pretty aggressively low. It would be like way down here. But you got to remember, like not all targets can be hit. So watch your barriers along the way. And that's this uptrending momentum that's 90 days old. We have this point of control that's pretty much defines, it's the POC of the entire asset's history, right? We pull this value area from the beginning of its time. And we also have the 50-day. So you definitely want to front run a move like this when you have this many barriers in your face. But yeah, so just be careful. The positive is like we could also find support here. We have the confluence of the 15-minute order block with the confluence of the support level with the confluence of the 200 EMA. So we might actually find support here. So checking this downtrending momentum and then waiting for a potential change of character down here. It could be a good call to help you like trade this as a potential range, and if it instead goes range bound instead of confirming this head and shoulders. But that's Aerodrome, man. I hope that helps. If you have any questions about that, you could always reach out to me in the Discord. I'll leave this out. I'll save the layout. Let's go back to Bitcoin, switch to the 5-minute and zoom in, see what we're doing. So now we broke above the VWAP. We got that break of structure. We got the higher high. So we got the internal break of structure as well as like the 5-minute here too. Cool. What else we have? Koma saying he's trying to build a strategy based on the Shihai, testing a few options, but not there yet. I tested a couple of things with Shihai. One thing I did notice, I mentioned this before, but one thing I definitely did notice was the on the 15-minute time frame, if you see an engulfing candle and a Shihai diamond on top. Let's pull up the indicator. Shihai, there we are. But if you see a Shihai diamond on the 15-minute time frame and a tweezer reaction at a value area high or a value area low, it's a very good rule that you could use for an entry for at least a 1 to 2. So here's the 15-minute time frame. I don't see any examples to give you. Unfortunately, that's kind of a scenario. You don't want your scenarios to be too rare, or else you're not going to get any trades and you can't live off your trading that way, unless you're trading with a massive pool of funds, like $250,000. You want to be able to survive off a smaller account, right? Like a $10,000 account, $15,000 account. So you need to have more opportunities. But yeah, well, you definitely, if you're trying to like define rules for yourself, what you could do is just stack it onto existing rules that you might already have in your trading. For example, like I look for a loss of momentum and a change of character at a value area high, and confluence. Then that confluence, I would be looking to target the value area low. And what you could do is say, like, I will not enter a short unless there is a Shihai diamond, or I will not enter a long unless there is a Shihai diamond, right? And then you have to create, with some of these, you might need an aura backed rule saying like within the past like 5 candles, if there wasn't a Shihai diamond, when it confirms kind of thing, or the past 10 candles. But the longer you extend that aura, the less relevance it has. Trying to catch up to the chat here. Oh my god, is that the real content? Yeah. So bad. $500 account. I want to be real with you. You probably won't be able to live off a $500 account unless you are still living with your parents or something. Just because, like, in order to, like, let's say, like, the average person's expenses, unfortunately, is like $4,000 to $5,000, depending on where you live. Some people's rent is $4,000. And to do things off a $500 account, you should be, if you're trading in a healthy way, you should be risking lose like $5 to gain 10, right? And if you have like a 50% win rate, and you have, let's say, 10 trades per week, or maybe 10 trades per day, depending on your strategy, like you'll know that you're going to be making probably $50 in that week. So if you're able to live off of $50 per week in this kind of scenario, of course, then yeah, go for it, bro. But you might be you're in the compounding stage where you should be focusing on like growth and try your best to like build that emergency fund so you don't end up taking away from your capital, and just let it compound until you get to an account that can help sustain your bills. And you don't want to just like cover your bills. You want to cover 3x, 4x your bills. You don't want to living paycheck to paycheck, right? So allow it to grow, be consistent with your risk. Don't rush, and I promise you'll get there if you're dedicated and you focus on your risk management. Rent like that. It's on the side of the Atlantic. Well, I've heard New York is pretty rough. Some members of the community told me the rent's like $4,000. It's depressing. My mortgage is. I just refinanced. My mortgage is like $1,000. Like it's. I know it sounds weird, but it's cheaper to buy a home than to rent these days. Um, but it's tough. I'm not gonna lie, isn't it? It's tough to get your first house, and um, Ian saying, I started backtesting your old impulse strategy rules from an older course in the current market conditions. So far, so cool. So far, so good. In the current market conditions, I can see it doing really, really well. Whenever we're in a trending environment, that strategy is amazing. Whenever we're in a range-bound environment, it's not that great. The impulse strategy is one that you definitely want to start using in a bull market. And luckily, we've been in a bull market since Bitcoin was at 16K. And some of the ranges that Bitcoin's been giving us, like even these like huge ones from over here, I could see it doing relatively well too. Because this was like a 20% range, right? From like the value area low alone to the value area high was 16%. California, $4,000. Jeez, man. Okay. That's nuts. You can Bitcoin for a mortgage now. Yeah, I was the first person in Eastern Ontario to use Bitcoin to buy a house. And it was a very painful process, I'll tell you that. I had to go through all my MetaMask transactions to explain to the bank where the money came from, how the transaction occurred, what a liquidity pool was, and like, oh, yeah. I had to go through 1,000 and I think it was 140,000 transactions I had to go through to explain where the money came from. Because everyone who trades in crypto is automatically seen as a criminal by banks. So it was fun. In your country, your average salary is 1K. Jeez. Well, in your country, if you work remotely, you have a lot of opportunities then. Because you can work for people in the United States or in Canada, and they'll pay you well over than what the average salary is. Oscar wants to look at Bitcoin dominance and others. Sure. Yeah, let's do it. Let's go to Bitcoin dominance over here. I have this better mapped out on another. Let me just pull up. Trying to remember. There we go. Let's go to Bitcoin dominance. Here we go. Wild. That will probably break. Zoom out. It's the last zone. Yeah, okay. So we're coming out to a daily order block on the dominance. It's not technically an order block. But yeah, Bitcoin dominance has still got this like straight up behavior, right? Ever since the ETFs came out, like that dominance will never grow against alts. We'll see what kind of structure we define. We're coming in up this area of interest. We're almost fully mitigated our zone because it started off bigger, right? We were looking at this whole area here, and now we're pretty much down to fully mitigated it. It'd be pretty intense and wild to see it get above like 73, 74. But the way the market's going, I could see it getting to those highs. But yeah, we basically just got to define our dominance shift to a daily change of character, right? The last one that we had was here when we broke this level. We had alts do a really decent rally during that moment. So maybe from this pullback, we're starting to get up to that area of confluence. This is our current key level on the daily that could define a potential move down. But yeah, right now it's still, it's looking strong. The other's dominance, and relative to that, it's looking pretty damn weak. It's literally inverse to what we just saw, what it's supposed to be. But yeah, we had our key level here marked that we wanted to have broken, but we never broke it. This is defined based on like lower time frame structure. But now we have, if we get that lower low right here, this will become a key level that will help define a potential altcoin rally. So we might get that double bottom. But if we get that break structure and we keep going down, then our next level of interest is pretty far down. It's way down at like 584, 585. Yeah, 584. Let's see what we have for structure here. Order block here, but see, zoom. Oh. Send it back. All right, yeah, so if we come down here after we get the lower low, then this is our next area of interest for potential reversals. But I'm kind of hopeful. I don't want alts to completely die, right? I'm kind of hopeful that if we do get that lower low, that we come up and get that change of character reaction very shortly afterwards. I'm not heavy into holding alts. Like I'm a heavy Bitcoin holder, but I am preparing though. I am preparing right now to buy at least 10 altcoins, and I'm focusing on RWAs and AI and energy. So I'd recommend everyone to do the kind of same. Not financial advice, but if you're looking for assets, try to find one with relative strength in the energy sector and RWAs, AI, or in data storage too. Anything to do with data storage. If they are, I'm telling you, it's going to be insane. Once the altcoin season actually happens, which we're nowhere near it. We might be near a rally, but we're nowhere near a season. I think the season will occur until Bitcoin's overheated. So once this chart here gets to the red zone, and then we have that daily change of character, the funds will start to flow from Bitcoin into alts. Almost always start with network tokens. At least it has been that way ever since the creation of cryptocurrency, right? So once we're in this overheated zone, then prepare for the actual altcoin season. And your altcoin season, you don't want it to be your entry plan. You want it to be your exit plan. You want to be looking for your exit at that point. Unfortunately, most people are looking at the season as an opportunity to buy things, and it should be your opportunity to prepare to sell stuff. So this chart is like your warning sign to tell you that the season's likely going to occur, and investing at that point is a little too late. Because once the season ends, the bear market starts. And when the bear market starts, things just keep going down. I do think that this bear market is going to be unique, just like this bull market has been unique. I think we're going to have a slower drop than what we're used to. And our percentage-based drop, I doubt will be 90%. We're used to seeing 80 to 90% drops in the bear market. I don't think we'll see that ever again in Bitcoin. Okay, we're going into the wrong charts here, Kyle. I got to pull up Teo because there we go. Yeah, I don't want to mess up the charts for anyone who's using those links. But yeah, 7.23%. Yeah, 7.23%. That's a key level right now. Or will be one if we break this low. Right now, it technically isn't. But this is basically telling us that most alts should be looking like this, where we just had this low, we had a pump, and we're creating another, like we're going down lower here. So most alts should look like it might be forming a potential double bottom if this neckline were to break. So this is unconfirmed potential double bottom. We first need to break the downtrending momentum to start running up from here. So watch your assets and see if see their momentum levels in correlation to this price action here. And as we get down here, if that asset has relative strength, it's going to do this on its own. If it doesn't have relative strength, it will follow alongside this. Let's go back to Bitcoin. Well, we got the chat. Oh, $50. Alex, what are you doing, man? I appreciate you. You don't need to do that. I need to spend some money somewhere. Thanks, man. Appreciate it. I might actually get it this time too, because like I just finally got my it took me 2 years to get my account fixed for YouTube to actually start getting paid from YouTube. I think I have an account grown for like $580 from YouTube. That's how much I've made. If you're wondering how much I make on YouTube, by the way, guys, like I make about $20 to $50 a month. So it's not like a huge like thing, but I know like Alex Crypto does really well. And unfortunately right now he's like demonetized. So if you guys could try to help escalate him getting his account back to being monetized, he made a post on his Twitter account. And if you retweet it, maybe it'll get YouTube's attention to help monetize him again, because he doesn't deserve to be demonetized. I appreciate it, man. Thanks for the 50. And Brian, that's not 75 cents, man. Our currency is much. I think our currency is 67 cents to your dollar. And I know you live in the United States, so every dollar is like, yeah, about 67 cents Canadian. And it's been really volatile lately. So anyone who pays themselves, if you're Canadian or live in another country, and when you're trading against US dollars, you're earning USDT, right? So it's helpful for you to start charting your native currency against the US dollar so you know the best time to pay yourself. You want to be paying yourself when your currency is weak against the US dollar so you earn more of your currency. And that kind of patience will, make you a little bit extra more money. If you're only paying yourself like $100 from your trades here and there, then it's not going to be a life changing. But if you're paying yourself like 1,000 to like 10 grand from your trades every week or a month, it's kind of helpful to be patient. Wait till if you see any signs of weakness in your native currency, it's good to wait a little bit. YouTube takes so much of it. I think they take 30%. The dollars, I would do crypto donations through Stream Labs, but he doesn't care about the money, which is fun. Yeah, I hear ya. Am I in a short? No, I'm not in a short, but we are in a spot where we should be preparing very soon, like up here at this value area high. If we lose momentum and get a change of character, we can start targeting the value area low. If we find support here instead with the break of structure and we break these highs, then we'll be moving to our next area of interest right here. So we have a confluence zone where there's liquidity resting around 109,000, and we have this downtrending point of interest from the all-time high. But I think we're either it happens here or if it happens here, I think the drop we're going to have is pretty harsh, like similar to this one. Just based on the liquidity behavior alone, this regression trend has stacked a lot of liquidity below us. It's at around 104. Yeah, 104,000 right here. Crazy amount of liquidity. But one thing you guys should know is right around here, from like this high to this level here, it's about I think it's about 11 billion. Oh no, it's $11 billion from here to here worth of liquidity. So let's see if all those people, stay in their shorts, they're going to get destroyed. Like there's a chart you can track to find out and watch people live getting liquidated. Aerodrome. I'll give you guys the link here. It's free to use. I just put it in the chat there for you guys on YouTube. For anyone who's watching Twitter, on YouTube there, I got the thing set up. So right here on the right-hand side, it takes a little while for this chart to populate everything. But on the right-hand side, you can see that there's an order showing you live orders. Right now, the volume is kind of crappy, but it'll start to pick up. You'll start seeing them come through. Is this thing working? Go to the 5-minute. And one thing that's kind of nice about it too is you can also see like the seconds chart, the 1 minute. So if you only have like the essentials plan, or you have a free plan going on your trading view, like this is a good one to see like multiple time frames that are pretty clean. Yeah, for some reason it's not showing the actual candles. At least you're seeing the orders come through. But here you'll be able to track when people get liquidated too, and it gets stacked down here. The longer you leave this chart open, just so you're aware, if anyone has like, it doesn't matter how strong your computer is, you don't want to leave this chart open too long because it starts to stack memory usage and it could really hurt your CPU. And when I say that, I mean like leaving it open for like 6 hours plus, not like an hour or so. You might want to refresh it every once in a while. So don't leave it on overnight. That's all I'm trying to say. Watching someone losing money must be fun. It's funny. What type of indicator do I use? What type of indicator do I use? Right. Mostly I use the fixed range volume profile for my stuff. It's my primary indicator. You can visualize the value areas most of the time. But yeah, the value areas, one of my primary indicators to help control my bias, where I can look for the extreme highs for liquidity grabs on each side. So I might be jumping on an SFP, I might be jumping on a change of character, but value area is what I use to control my bias. And like trend lines for drawing momentum. It's not technically an indicator, but it's a great tool to use to track buyers and sellers momentum. And points of interest. And the VWAP is a great indicator to help control your bias. And it's also a great confirmation indicator. So if you have let's say like a double top structure, and then we break the VWAP simultaneously, that's a form of confluence that you can use for helping you with your trades. Yeah, those are my primary indicators. And then the RSI, of course, but that helps me determine exhaustion confluence. What site do I use for the order book? I use CoinGlass. I'll give you the URL here, the link. There you go. So this is the order books that I use. It helps you find areas of high amounts of confidence in the market, or what market makers could be doing to control the market. So here, for example, is a buy wall for the amount of 350 Bitcoin ready to be bought at 107,240. We have a sell wall over here, for example. We have a couple actually. We have a smaller one here at 107,990 for the amount of 150 Bitcoin. And then over here, there's a bigger one at 108,360. So you can use this in confluence with your areas to determine what buyers or sellers are doing. So like one thing that's really, really helpful is if you were like, let's say, for example, planning for a short and you see there's a big sell wall right above you, you can use that sell wall as your stop loss guard because the price cannot go past it until that sell wall has been filled. So sell walls are good for capital guards, sell walls are good for confluences, and they're good for your targets. So if you're entering along here and you see a sell wall up here, you'd be ready to get out here if we can't get past that sell wall. because they normally create horizontal resistance, which could induce a reversal. Same thing, the opposite's true for buy walls too. Okay. The Augur site makes fun noise when it buys or sells speed too. Yeah, I don't know if it does it anymore, but that the the Augur chart also like has like gifs that will appear when people get liquidated. It'll show like a Dragon Ball Z character getting like eliminated or something crazy on the right hand side. But yeah, but it'll show you like orders being filled on multiple exchanges like Coinbase, Binance, OKX, um, stuff like that. So it's kind of handy having like a universal tool like that. It normally shows you your candles here too, and has great indicators, but it's not populating anything. And the indicators are great for a free tool. It's like basically getting a free access to TradingView in a sense, but it's not as great as TradingView. But it's kind of nice for someone who's like trying to trade on a budget while they're trying to figure out whether or not they want to do this for a living. It's pretty handy. The liquidation heat map is really handy, tracking all that. But they have CoinGlass Legends is another cool new free tool that you could use. It's built in on. Let's go back here. Right up here, if you click on Legend, this is a new tool that just got released where you can see aggressive market orders. You see the liquidity levels on your chart. This is all free. Pretty intense. Get your fixed range volume, or not your fixed range, your visible range volume profile on the right. It's handy. So help you control your bias. This is a great tool. Your CVD, your open interest. Pretty cool. You control the intensity of the heat map. So another one I would recommend. Sell walls are also good to deceive retail. Yeah, if you have like NTIFs, like buy walls and sell walls, you want to be watching the age of them. How long are they on the chart for? If they're on the chart for only like 10 minutes, you're not going to trust it. But if it's on the chart for, like 4 hours, 3 hours, for a long period of time, then you know that might be market makers trying to control the market, not just trying to deceive them. You want to use market makers as a tool, right? Just like they use retail as a tool to induce volume, right? They're normally the ones that create the sell walls and buy walls to create the resistance, and then they'll induce volume to cause changes of character. And their goal is to use retail to drive the market to the next area of liquidity, like down here, for example, so they can use it as entry-based liquidity, and then repeat the process for exit-based liquidity over here. But the walls are, what you can do with the walls is find areas of confluence, just like how we knew this trend line was going to be honored consistently throughout this uptrend. You could watch the buy wall trail it through here. And it could be just one giant institution trying to get into the market, and they're trying to get every pullback that they can. Or it could be market makers trying to drive the price up. Based on this behavior, it's more likely a institution trying to get in, but there's also what retail could do is create undercuts to that buy wall and undercuts to the sell wall. So if you see a giant sell wall or buy wall here, you see people undercut it. And then what ends up creating structure like this, where we're hitting our head off all those undercuts until eventually whatever side has the most liquidity, usually we end up breaking towards that direction. But yeah. You're right. You should always be cautious. Don't just trust one thing. Stack as many things as you can on top of each other so you can use that additional probability as your edge for your trading. What else we have in the chat? Were you missing anything? Can I do Sui? Yeah. Sui. It looks weak, you're saying, eh? Let's take a look at Sui. We got open up layout. I gotta go right after this, guys. I got a call with someone. I just gotta. But I'm curious to see what you guys want me to look at here. So we have lost this to momentum. Let's pull. Oh, this is actually a good example I'd like to show. Like people are trying to. I get the question asked all the time. When is it appropriate to pull a fixed range volume profile? And it starts when you have whenever you see like a demand zone like this. This is a bullish example of when you're pulling your fixed range. But whenever you see a demand zone like this, we have an impulse move, a base, another impulse move. We create a form of demand, an area of interest, right? And when you have your opposing change of character, see, like right here, at that moment, you can define this as your potential target, right? Because the demand zone after an opposing change of character is normally the target or the bottom of the upcoming potential range, right? So at that point, at that moment, right from here to here, is when you can actually pull your fixed range volume profile to start assisting you in your trades. Like where's your point of control? Where's your value area low? Where's your value area high to help you with confluences? And then just keep on updating it so long as we have acceptance within it. The moment we escape it, like let's say we go up here and we escape it, you stop your pull until we get acceptance back in, and then you start your pull again. We end up mitigating that full area shortly afterwards here. Once we mitigated the full zone, sometimes you want to include your pull with the demand zone, but only if we get a return back inside the value area. In this case, we did not. We used the previous value area low as resistance after hitting our POC off our previous range and are starting to come down. We deviated quite far away from it. So I can see why you're saying there's weakness, because relative to all the other assets we looked at, some of them are below their value area, but not that far. Like it's just way beyond the point where you consider targeting this value area as a primary target. Instead, you'd now be doing something like this. Return. You just got to change the template to short. And we're coming down to this demand zone here, this little one. A little tiny little area of interest. Right before we had that inverse head and shoulders, which gave us this technical target. I think the last time we were looking at it was here. It looks like we ran up and hit that target shortly after we were looking at it, hitting that previous supply concern. But yeah, now we're here. Send it back. We're seeing we broke momentum ever since we came down through here. Our change of character on the 5-minute is here. Let's look at the 15. 15 is the same. Yeah, same kind of level. So you'll have multi-time frame confluences here if we break this. And it could induce a move back up. Well, you have to watch your barriers along the way. So this could be a key area of interest where we start to form a range, with this being the potential range high. Right? So this could be the potential bottom if we confirm that reversal. So once that's confirmed, we watch our VWAP along the way, but we target this as our range bound high, and we could start ranging like this. Right? Just like we were ranging between this supply concern and this demand zone before, we have this supply concern and this local demand zone here. This is an area of concern along with the VWAP. Right above this high is also an area of concern, but this is your primary target. Is tail breakout retest the 5 minute right now? Or too small for retest? Let's see. Let's see what's going on. I can tell you right away that this is not a proper retest on the 15 minute. We'll see on the 5 minute. No, not proper. You want to have 2 consecutive candles giving you a pullback. That's what defines a healthy pullback. So when you have 2 consecutive candles and then a higher high, that's your proper retest. And then you use that, because what will happen is, in terms of like market structure rules, is you'll have a strong low to base your stop loss off of. And strong lows are typically guarded levels. So you can use that in confluence to know your capital is likely going to be guarded to help you with your trend-based move. Now, trend trading, you are going to have a lower win rate than a range trader, but your R&R is usually pretty incredible. Because when you're doing a trend trade, you're technically swing trading, right? And swing trades give you a high percent return on your entries, but you got to be really careful with how you manage your stop loss to make sure that you're getting proper R&R on your moves. Giving your stop loss too much breathing room, so long as you have the R&R, it's great. But if you give your stop loss too much breathing room, then you're gonna hurt what your margin's trying to work you for. You want to have that R&R multiplier being as high as possible. Let's be close to a 1 to 4. But yeah, we have barriers to worry about here. And if you try to manage your risk based on your barriers, it's a lot more healthier mentally. So you know, like, okay, if we can't get past this barrier, I'll at least get a 1 to 2, right? And if you don't get at least a 1 to 2 towards like a huge barrier concern like this, then you shouldn't think about entering the trade. But if you're getting but ultimately you could be trying to target for a 1 to 4. So we risk and lose $100, for example, to try to gain like 426. And then you got to minus the fees after that. So just a little bit more time. We got a bit of a tweezer reaction, so we should get a pullback. And then once you get that higher high, then you got yourself a setup. If we instead go range bound here for a bit, you want to see the value area high of that range act as support with a break of structure, and then you can jump in on it. On the 3 minute, we have a proper pullback. But we're looking at a 2-day regression trend. So I would prefer if you at least waited for like a 15-minute pullback. Where we have chart tail, Bitcoin. There we go. It would be nice to place the stop loss below that VWAP too. Yeah, having a VWAP guard is great. It's just a matter of whether or not tail, the VWAP will actually catch up, right? If anything, I could see us retesting that VWAP and then getting the higher high, and then boom, you got yourself that as your stop loss guard. But yeah, you want to have indicators as potential guardians too, especially ones that are respected like the VWAP. That could be an additional guardian for your capital. So hopefully get that 15-minute pullback. You just want 2 red candles and then the break of the high. And then you got your stop loss guard. And you can take that break of structure continuation up. It's not about the price that you get. It's about the R&R that you're trying to capture. With traders, your goal is to capture the path, not try to capture the best price. Kyle dropping that alpha. Thanks, man. You're the guy that I would have to have a call with. Yeah, I'll be jumping off this very soon, man. We'll jump on a call together. Let's see what we have in chat. I think there's another request that I could go after. I'm trying to see what it was. I believe it was what's the token called? AVAX. Okay, so let's see what Avalanche is doing. Haven't looked at it since June 19th. Jeez. Just been depressing downtrend here. It looks like the last time we were looking at it was for this move up. We're watching this key level. If broken alongside this downtrending momentum would give us a move up. We grab this local liquidity, double topped, and started coming down after that. So it wasn't a great move. Was there any confluences in that area? A little bit, not much. Previous neckline, order block. Now it looks like we might be building or fractalizing a little bit, building that inverse head and shoulders behavior. Pull a fib from this high to this low. Downtrending momentum. Retesting the previous value area high. Pull the value area high here. So we do have some confluence for a bounce back up. We took the liquidity, a little bit of liquidity from this high. We stacked quite a bit above us. So we have a decent reasoning to come up from here. Where we got for a 15-minute structure. Our change of character isn't until up here, unfortunately, alongside that VWAP. So for the 15-minute structure to be defined as bullish, we need to break this level. Okay, we did get a lower low here. So we already got the change of character. I didn't see that, Wick. I'm sorry, guys. Yeah, we got the change of character already. We even got an SFP. That would probably be the best trade opportunity, was right here on this candle. When we came down and swept this liquidity down below with this candle here, and we closed back inside the range like this, that's defined as an SFP. This is what you want to look for an SFP trader. SFPs tend to give you the best R&R out of every trade setup I could find, at least, because like it could be a front run to a continuation. Think of SFPs as your strong low or strong high attacker. Once you see a strong SFP, you got to assume that your strong high or your strong low is being under attack. And eventually, and when you get that change of character, that tells you can stay in your trade. If you don't get the change of character and you have a low time frame opposing change of character, then you get out of your trade. Or some people just exit, right? As soon as they hit their target, that's healthy too. As long as your R&R is there, just take the exit too. But yeah, we got a 5-minute pullback. Yeah, 5-minute pullback, and we got the higher high. So we got a 5-minute confirmation. So we were just talking about, we're trying to find examples for confirmations, and this is actually a good one for a 5-minute posture. So we got that healthy pullback, and we got the higher high. So we got a 5-minute confirmation off of a double bottom neckline. And the measurable base target, let's see, it's not that wild, unfortunately. It's a young double bottom, nothing crazy. So we could see it bring us to basically the target is the momentum. So here we have to watch our head off the VWAP. We have to watch our head on the supply concern confluence. Yeah, we could just run up to here and then come back down. But when you see one double bottom, we normally create 3, right? Double bottoms is the most common structure to fractalize. So if we see a double bottom here, we could build a neckline for another larger double bottom, right? 1, 2, 3. It's insanely common. You'll see it everywhere. Trust me. But yeah, that's what I'll be preparing for, is potentially just coming up, hitting our heads here. The volume's kind of crappy today. As we come down, maybe we'll get more volume coming in soon. But that's AVAX. I hope that helps. But overall, I would be preparing for longs. Obviously, if you don't want to be looking for shorts, the shorts already kind of happened. So here you want to be preparing for that reversal, targeting this value area low from here to here. Actually, we can actually pull it up further. We ended up using the value area low last time here as resistance. So that's where I'd basically be targeting here. Watching these highs as well as barriers along the way. But the pathing that I'm recommending to prepare for is this. Basically. All right, cool guys. I gotta head out. Appreciate everyone who's been following, watching, asking questions. I love answering questions. Thanks, Mark. Appreciate it, man. What does trigger wave? Does trigger wave say anything for you? This even says using it. I have no clue even what that indicator is. Trigger wave. So you're talking about the market cipher. When you see your trigger waves, you can use trigger waves in confluence to potential longs or shorts. When you see them, they're signs of strong momentum building up. I don't use the indicator myself. It hasn't. I used it a lot about a year ago for about a 3-month period. I was giving it a trial, and I found that it had no impact over my win rate compared to using the RSI. And I found that most of the time when I was looking at the market cipher indicator, I was looking at the RSI within it. But I'm not saying there's anything wrong with the indicator. It's just something that, because of my rules, it didn't really lift up my win rate very much or at all. It was basically the same. So I do recommend it as an indicator. A large amount of our team uses the indicator. Like I know Brian uses it. He does really well with it. So if you are, I believe you're a part of the community. I think I see you in there. Your name's really familiar. I'd definitely talk to Brian about that. I need to call you. I know too much not to be profitable or know enough to be. Hey, if you might be at that stage where you just need to, if you have your rules, you might be at that stage where you just need to write them down, man, and check them off and get good with your, maybe go over your risk management. It doesn't have to be as far as a call. Like maybe you can jump into one of our trade hunting calls with the community or stuff, and I can answer any questions there, because it's not just trading. While we're waiting for the setups, I'm also like coaching you guys, answering any questions to help you with anything that you're struggling with. But yeah, guys, yeah, stay safe. Don't trade Fartcoin. Yeah, it's good. Yeah, you have yourself an amazing day, guys. Reach out to me in the Discord if you need any help with anything. And I'll see you, what today is Thursday, so I'll see you guys tomorrow. Yeah, I'll see you guys tomorrow. See you guys. Bye.